Tesla's starting off on the wrong foot here this morning. We need it down about 2.5%.
It is, because yesterday it snapped that 13-day winning streak.
Elon Musk said on his shareholder meeting, he said flat out, like, we want to be like Android and really open up this software to everybody.
And the question is, do you want to become a momentum investor or a fundamental-based investor? And in the question of NVIDIA...
That's a great question. How would you answer that? And I wonder if there are a whole mass group of investors who are rethinking what they are and what they want to be, and in some cases what they have to be in this kind of market.
Tesla breaks its 13-day winning streak in the market, yet analysts are still raising their fair value estimates for the company. Some believe the stock is slowing down, running out of steam. You've got others saying it's only just begun.
Let's go back to Renita Young, who's in the TD Ameritrade newsroom with some notes out from analysts on very important companies. Tesla's starting off on the wrong foot here this morning. We need it down about 2.5%.
It is, because yesterday it snapped that 13-day winning streak, and even at about 108% up year to date, we see other analysts saying it can go higher. However, it is at the most overbought in nearly 2 years. RSI Momentum Indicator shows the highest level since early November 2021. But these notes show a different story, because RBC raised its price target on Tesla to $305 from $212 and kept an outperform rating, saying that the full driving software for Tesla should offset the margin dilution that it's been having due to the lower priced models. And it should also position the company to transition pretty well into a software business. Now, it also talks about the robo-taxis idea, and that those included with the autonomous software could potentially transform society more than anything else. Big words coming from RBC, but they say that about 25% of Tesla's robo-taxi could see 25% penetration, I should say, in the United States as consumers switch away from private car ownership. Now, this is interesting because we have one side of Tesla that's very much so telling consumers to buy personal vehicles, and then we have this other side of the story. But another view comes from Wedbush Securities, which now has an outperform rating on the shares and has a price target of $300, talking about Tesla, saying it's on track to hit $1.8 million in unit delivery, I should say, for the year. That was a goal that Tesla set. Dan Ives also noted that he believes the China demand this quarter is progressing pretty strongly, and that it should translate into a record quarter in China because of the last few weeks that may come through in June. Now, battery production out of Nevada, Dan Ives says that remains a pretty strategic advantage for Tesla.
First and foremost, I kind of get the impression that as she was speaking the words, it was probably the first time she had ever had to think about what she was saying. The fantastical nature of robo-taxis, I got the feeling that she was kind of reading from a science fiction novel, not actually believing what she was saying. I find it odd that you would bring up that Tesla is selling privately owned vehicles at the moment, and how that is counterintuitive to wanting to develop a robo-taxi fleet. But that level of thinking is quite shallow. Maybe if you weren't the company that owned the software. Every car that they produce will be bought and sold for the purpose of transitioning the earth to a sustainable energy economy. Whether it's for private use or installed in the robo-taxi fleet, Tesla will make money. Mounds of money, no matter which way you slice it. Many of the bearish narrative concerns that I hear would be pertinent if Tesla was producing in excess of 15 million vehicles per year. When you're talking about demand, if you're producing 15 million, you may have some cause for concern. Are you producing at capacity? And then all these other superfluous numbers come into play. COGS, margin, etc., etc. Tesla plans, and I use the word plan very loosely, to produce 1.8 million vehicles alone this year. I'll go ahead and go on the record that it'll be closer to 2 million, but that's just me. I wouldn't be shocked if that number exceeded 2 million. But while everybody on Wall Street expects 1.8 million because that's the sandbag number that Elon and the team gave on the earnings call, so be it. We'll see if a record Q2 will change the minds of those on Wall Street.
The tone here is still obviously very favorable But everyone's got to take a break for a day, and that seems like what the stock is doing. It lower by a couple percent, nothing terrible. And we'll see if it can stay down there, because it has been quite buoyant over the last couple months.
Stay down there? I hope so too, because I am going to continue to buy. Quite frankly, if the stock soared back up to a $1 trillion market cap within the next couple of months, I would not be surprised. I'm going to continue to buy stock and call options with every opportunity that I can get for the foreseeable future, because once the most shorted stock in the world continues to soar ever higher, Tesla's going to take off like a firework from the 4th of July. And it's going to be swift and spectacular.
Let's turn to another mega cap here. We're talking Tesla officially, at least for the moment, snapping its 13-day winning streak. It did flirt with going into, actually it's up again right now. So it's not snapped that losing streak. It could be 14 days in a row, I guess. Or was it down yesterday? I guess it was down yesterday. All right, never mind.
Somebody please give Julie the right cues.
The EV maker's valued by over $200 billion. For more on the future of Tesla, we're joined by Tom Narayan, and RBC Capital Markets lead equity analyst of Global Autos. He's with us here in the studio. Hey, Tom. Hey. You were out with a note this morning that made a lot of interesting hypotheticals about how big the proposition is for autonomous driving for Tesla. I mean, you make it sound like robotaxis are going to take over the world and Tesla's going to have a big market share with this. Like, paint for us this future.
The group of individuals out here talking about Tesla's robotaxi with any real earnest are the folks over at ARK Invest. So much like Julie, I am interested to hear his take. Is it more bullish? Is it less bullish? Is it right about the same? Do they have the same feelings that ARK Invest have? How much of their valuation do they have robotaxis priced in at?
Yeah, and I think what's really pushed a lot of this to the fore is the deals that they've struck with Ford and GM, basically opening the supercharger network, and effectively these two OEMs coming to Tesla and choosing their platform. And I think this shows how they could sell software to other OEMs. The reason why robotaxis could be so transformational is their ability to save literally millions of lives. I mean, everybody in this room probably knows somebody who's been affected by a car accident.
Facts. Understand that once Tesla gets the green light and NHTSA is like, yeah, that's a level 5 autonomy, that's a wrap, folks.
Trillions of hours, opening up opportunities for mobility to the disabled. There's so many countless reasons why cities in Europe and China, for example, are already talking about banning private cars in the future, saving space and real estate in the cities. There's so many great reasons, and why regulators, I think, ultimately will push this. Now, this is far in the future. I do caveat that. But when you do the math on this, the potential for profitability of this is massive, especially versus just a car company.
The point you make about robotaxis and the potential for autonomous vehicles, I mean, that feels like that's an argument that's been around for a while, and the timeline keeps getting pushed back, but it feels like the approach from Tesla has changed. It used to be a lot more closed. This idea of essentially partnering with Ford and GM points to their now willingness, right, to be able to work with partners. How does that open up additional levers for the company?
I mean, you're exactly right? People thought it was a walled garden of sorts, but, Elon Musk said on his shareholder meeting, he said flat out, like, we want to be like Android and really open up this software to everybody. My modeling that I did this morning for my $305 price target only assumes that they reach like mid-single digit percentage penetration on robotaxis in China and Europe, and only 25% penetration in the US. It's really through licensing. That's what's driving the story. It's only them and maybe a couple of other folks that are really pioneering and leading the charge on this. Just look at the FSD software that we have today. They're the only game in town that has as many miles on the road.
But this idea of opening up the walled garden, that's the analogy we want to use, how much of that was driven by the competition that is increasing in the EV space, the price cuts? I mean, we sort of look at these partnerships as if this is an all-win for Tesla, but doesn't that also point to the needs that Tesla now has?
Yeah, I think this is always the goal, always in mind, right? It was get as many cars on the road as possible, prove the technology, and then open up and license it to everybody. The reason why they're cutting pricing is they want EVs They want EV penetration to increase. If your neighbor has an EV, you're more likely to buy one as well. The real denominator here is ICE cars. And opening it up actually increases EV penetration and also increases the chance that you'll see that their software is probably the best, if not one of the best, in the entire group. And there's only a handful of folks that are really doing this. And so this industry, robotaxis, could be multiple $1 trillion of opportunity. And these guys are one of a handful of folks who are actually doing it.
Not only just doing it, but doing it, and doing it well. Cruise, Waymo, whenever you're talking about geo-fenced area locations, mapped in high definition, things gotta be the same or I'm gonna shit. But of all the companies pursuing this lucrative endeavor of driverless vehicles, robo-taxis essentially, Tesla's the only one that has a generalized solution. Everybody else needs to pre-map the entire planet and continue pre-mapping as it changes for it to work.
So when we're talking about your $305 price target, that's a 12-month price target. It doesn't sound like, I mean, if you're looking at a certain percentage of EV penetration, of robo-taxi penetration, that ain't happening for
Long time.
5 years, 10 years?
No, actually, so
20 years?
Yeah, you're right.
Yeah.
So my robo-taxi model uses a 2040 estimate and discounts it back. My FSD is 2035 and discounts it back. But even when I do that, I still get 70% of the $305 is robo-taxis. Just because the value is so big. Think of how much you pay for Uber for a mile. And think of how much private car ownership is for you.
But there's
You're
so
still
much,
willing to pay more.
But
Well, I guess my figures for FSD and robotaxi are a little bit more optimistic than our friend here. I have full self-driving being essentially completed by 2024. And then when you're talking about regulators and how much safer is it than a human and what is the smoothness level and all that stuff, I have a feeling that'll be done by 2024, late 2024. My first robotaxi, because right now, Tesla is in the infancy of making money in these various different arms of the company. You got Tesla Insurance, they're in its infancy. They're kind of figuring it out. They've got Tesla Electric operating in Dallas and Houston down here. They're like retail providers. They are ironing out the kinks in that situation as well. They'll be in its infancy when they open up the chargers. These other cars share their ports. This is in its infancy. All of these revenue streams are in its infancy. So when you're talking about robo-taxis, it's going to take a while for them to kind of put that together, the program, the rideshare program for existing Tesla owners or people with the FSD software. When you're talking about a dedicated robo-taxi fleet, well, that's going to be synonymous with the factories that it plans to build in Nuevo Leon, the expansion in Shanghai, where these other cities are basically courting Tesla to bring a gigafactory within their borders. That's where the robotaxi is going to be created. The third generation vehicle is a dedicated robotaxi fleet, cars that are basically stripped of anything a privatized buyer would want. Then they're also going to provide what people are calling the Model 2, a miniature version of the Model Y, a compact version of the Model 3, who knows? Nobody knows what this thing looks like. It's all speculation, but just know the Nuevo Leon factory is designed for the production of the next gen vehicle, whatever it may look like and whatever service it may provide. And I know it's a pipe dream. As I was growing up, computers really weren't a thing. Now they're in my pocket, on my wrist, in every room of my house basically. The point I'm trying to make is that just because it sounds ridiculous now, does not mean that it will continue to be ridiculous as the decades roll by. Life is hitting us fast in this generation. There is no doubt the internet, social media, the continual progression of how we interact with each other is constantly evolving due to the rapid progress of what we call technology. Artificial intelligence is just the tip of the iceberg that will spur us into this possible future. So if you're not modeling out robo-taxis, humanoid robots, and you think it's just too impossible, maybe opportunity might pass you by.
And that, when you increase the time horizon, you increase the unpredictability. I mean, there are so many other players that could come in and take some of that market share, no?
Sure, that could definitely happen. But how many other players have a $800, $900 billion market cap that can use the capital? Maybe Google, folks like that.
That's my question. Who poses the biggest threat right now?
Yeah, I don't know if I view it as a threat, really.
Me neither. Very few people out there can comprehend the vast amount of real-world data Tesla is acquiring every day around the globe when it comes to the autonomous driving experience. Hence why they have the most advanced full self-driving software.
Only has them capturing 20% of non-Tesla robotaxis. There's still 80% that can go to other folks, right? There are other companies out there. Your Mobileye, there's, Google Waymo, GMS Cruise. There's other players out there, but at this point, how many are as well capitalized? We saw what happened to Argo last year. They couldn't just come up with the capital. You need a lot of capital to throw at this, and Tesla has that capital.
All right, we'll see what happens. Interesting stuff. Tom, thanks for coming in. Tom Narayan is our RBC Capital Markets lead equity analyst on autos.
Can't stress this enough. Everyone balked at them when they removed the radar, claiming it would be impossible to have any level of autonomy without those sensors. And Tesla has proven them wrong. Again, every time somebody tells Tesla that it is impossible, Tesla says, hold my beer. And I agree. What competition? By the time anyone even comes close, it'll be way too late. Why would you entrust the safety of your family to anything else? Yep, he's gonna get as many crazy looks as Kathy and the gang get when they talk about robo-taxis, because it feels like they're reading passages from a sci-fi novel. And people like this, they'll need to see it to believe it. But by the time you see it, the opportunity will have passed you by.
Okay, our chart of the day, it is Tesla. It has snapped that 13-day winning streak. Bryn, more than $200 billion in market cap added over that period of time. It's just astounding when you really put those numbers into context. 13 straight days, $200 billion in market cap. What do you do? By the way, target raised to 305 at RBC. Just give us the thought process of an investor in this name watching that run happen and what you think now.
Yeah, so I mean, it's a volatile name. Obviously, Elon is everywhere, has his hands in so many different aspects. So I have half the position I just own outright, and the other half I sell calls against. And I keep getting those positions, which I'll sell like 15 to 20% out of the money calls, but the stock keeps moving higher. So that position will get taken away. So I have my core, and then with my other covered call, as the stock has moved higher, I am very comfortable selling calls against that. And if it gets called away, so be it. Because you have to understand, Tesla is probably the top option traded stock. It has been all year. And so there's a ton of option premium. And so for me, when there's a ton of option premium, I'm happy to make a 25% trade between the upside and selling calls. To me, that's the comfortable way to play it.
And I wholeheartedly agree. But even at 25% with a weekly expiration date, that's a great way to make some money if you've got hundreds of shares of Tesla. But it is still quite scary, as you could very well have to relinquish those shares of Tesla. Should the stock soar higher, you may not have an opportunity to buy those shares back at a lower price. There is risk, but there is money to be had by selling covered calls with these premiums. Just because you got a long-term hold doesn't mean you can't make a little money in the interim.
Margins are going to come down. You can walk through. There's going to be more competition. But I just really believe that Elon is the Thomas Edison of our time. And not only is he a great inventor, he's a great producer. And he can mass manufacture. And just look what's happening with GM and Ford. Like, for them to go to Tesla just tells you how superior their technology is, even down to their superchargers. So I just think it's a long-term hold. I love what he's doing. And I think that, I own a Tesla, and it's wonderful technology, and it's a fun car to drive.
Well, listen, it's very hard to be invested in growth. If you're a manager that benchmarks yourself to the Russell 1000 growth index, and you don't, this is the stat, you don't own Tesla, Amazon, or Nvidia, which are up on average 114% this year, they've accounted for 8.5% of the return. So you just don't own those. You're under by 8.5. You got to be pretty darn good to make up that underperformance.
But that's been the nature of the market this year, given the stocks that have run. When you look at, discretionary as a sector, for a while was the second or third best sector. Why? Tesla and Amazon.
Yep.
And home builders, which had a great run too. But those two stocks alone carrying the weight of a whole sector, those group of stocks carrying the weight of, in some respects, the whole market.
And the question is, do you want to become a momentum investor or a fundamental-based investor? And in the question of NVIDIA,
that's a great question. How would you answer that? And I wonder if there are a whole mass group of investors who are rethinking what they are and what they want to be, and in some cases what they have to be in this kind of market.
You know, if you have a strategy, it's ultimately going to work out if you hold true to your discipline, because momentum will break down and then you can get out of those names. Being fundamentally disciplined is incredibly tax efficient. It allows you to compound over time as long as the fundamentals stay healthy. So I think in the short run, you know, momentum's had its day. It's likely to continue to have its day. Okay? In the intermediate run, I think you want to be mindful of fundamentals, which is exactly why we trimmed our Microsoft position a little bit, right? So we've done that throughout the year where we've owned these big positions in our growth portfolio. The momentum has gotten tremendous, but then at some point, valuation becomes a ceiling.
Something tells me you're not backing up the tractor anytime soon for Tesla.
Well, I think you know what's on my mind, right? Why do I not own Tesla, but why do I own GM? And Rob just said something pretty smart here. You know, if you've got a strategy, you got to stick to it, all right? You got to stick to your knitting. It's actually something my father said to me a long time ago and drove it home, okay? Now, look, if I buy Tesla at any price, I can't tell you why that is the right price to buy it at. And I have to answer to clients when they say, look, it was 200, it went to 100, why did you buy it at 200? If I can't justify that, I won't do it. Now, in GM, I can justify it, and here's why. Besides the fact that the multiples are too low, besides the fact that the estimates are going up, here's the most important thing. They're buying back shares. This is where valuation matters to a guy like me, okay? They have the cash flow at this price to buy back shares, shrinking their share count 5% year over year at the last quarter, and they're doing it at 70% of book value. You know, I can go on and on about the autonomous vehicle, the cruise business, the electric vehicle business. I did get a Lyriq. It's a pretty sexy car. I mean, I really kind of like it. I do think their strategy is good, but at the end of the day, Scott, this is why valuation matters.
Hey, his strategy is going to work. Remember the late 90s. Momentum carried the day for a very long time, and then we entered the early part of the 2000s, and hedge funds became stars. Why? Because they're fundamentalists, and they were looking at all those stocks and identified all those stocks that were relatively inexpensive and began to explode.
Overbought, oversold, Tesla's too experienced, all that is kind of meaningless. The company will be worth multiple trillions in the future. And that's if we're just talking about the automotive business. We're talking about tens of trillions. Robotaxi, humanoid robot, energy division, insurance, charging network. I can go on and on and on. Infotainment. What do you think people are going to be doing when they're in their robotaxis? They're not just going to be twiddling their thumbs. They're going to need things to do. And Tesla will be there to provide that service. Well, that's all I got for you. Be easy. Peace.
Masaka.